How many shares do you need to retire on Tesla stock by 2030? That is exactly what I'll be answering in today's video. I'll be going over my bear case, base case, and bull case to figure out where Tesla stock could be by 2030, and therefore how many shares you'll need to retire. So if you do enjoy, please hit the like button to help support my channel, and if you haven't already, please consider subscribing so you don't miss any of my future investing and Tesla content coming soon. Also, you can gain full access to my Tesla stock valuation model and price target for 2022 by clicking the link in the description to join my Discord community of investors. You'll also gain access to weekly group coaching calls, the opportunity to ask me any investing related questions, and so much more. Alright, now before we can calculate how many shares of Tesla stock you'll need, we first need to figure out how much money is necessary to retire by 2030. As I explained in my last two Amazon and Google stock retirement videos, the average household living expenses in the US are about $5,100 per month, so we'll use this as a baseline. However, inflation will likely make your expenses quite a lot higher by the year 2030. So assuming an average inflation rate of 3% per year, this would bring our average living expenses to about $6,500 per month in 2030. But we also want to have spending money on top of what we pay for our living expenses each month, so let's assume that we want to withdraw $10,000 per month or $120,000 per year from our investments in 2030 and beyond. Now, using this retirement calculator online, we can see that $10,000 per month would last us over 40 years if we were to have $1.5 million invested that was continually growing at 8% per year, which is about what the S&P 500 returns after inflation on average. All right, now getting straight into my Tesla stock valuation model, what I'll be doing here is estimating Tesla's earnings per share or EPS all the way to the year 2029 because we do want to retire by 2030. To start, I took average analyst EPS estimates for 2022 and 2023 from Yahoo Finance under the analysis tab. Then analysts expect EPS growth over the next 5 years to continue at 37.2% per year. Now let me just say, I think these estimates are way too conservative. And the first reason is because Tesla has been very clear in their guidance where they say, over a multi-year horizon, we expect to achieve 50% average annual growth in vehicle deliveries. Assuming their average selling price per EV remains the same from 2021, this implies that Tesla will be growing revenues above 50% per year over a multi-year horizon. And for a company that's been improving margins every single quarter while recently increasing the prices on all of their EV models because demand is so strong, EPS should continue growing faster than revenue in future years. So riddle me this, how do analysts actually expect Tesla to only produce 21.6% EPS growth in 2023 and then 37.2% growth over the next 5 years? These numbers just seem absurd to me, especially in 2023 where Tesla is going to be ramping up 2 brand new gigafactories to full capacity, which will deliver massive cost savings and economies of scale. So I'll keep analysts' 57% EPS growth estimate for 2022, but I'm modifying 2023 EPS and saying it's going to grow 60% year over year, and this is completely reasonable considering that revenue is going to be growing above 50% in the year. Keep in mind, guys, if you think these estimates are pretty crazy, check out Tesla's last earnings report. In Q4 2021, Tesla grew adjusted EPS 219% year over year, so these future estimates are showing a severe deceleration in growth. Finally, for 2024 and onwards, I'm using this EPS growth rate as a variable in the base case, bear case, and bull case to highlight the different growth scenarios for Tesla stock. And since we know stock prices follow EPS over the long term, we'll be able to apply a 2030 price to earnings ratio to then find Tesla stock price in 2030. So we know our net worth target for 2030 is $1.5 million, Tesla stock price is around $1,100, and then their trailing PE ratio is around 160. Now starting with the bear case, I'm assuming that Tesla will grow its EPS from 2024 onwards at 30% per year, which is below analyst EPS estimates of 37.2% growth for the next 5 years. I also assume Tesla will have a trailing PE ratio of just 35 at the beginning of 2030. Now, if you weren't aware, Tesla just announced that they will be voting on a stock split, which should be taking place later this year, but since the split ratio wasn't announced, I'm only going to be analyzing the pre-split numbers for Tesla stock today. So by multiplying Tesla's EPS by their 2030 trailing PE ratio, we come to a stock price of $2,875 per share. And this equates to a market cap of $3.26 trillion in 2030, assuming no dilution or share repurchases. Now, assuming this bear case is accurate, you would need 522 shares of Tesla pre-split to be able to retire off Tesla stock by 2030. To buy all of those shares today, it would cost you $570,000 US, and this would eventually grow into that $1.5 million target by 2030 at a compounded annual growth rate of 12.8%. As we can see, this scenario only produces slightly above market average returns, which is why I labeled it the bear case. However, I think this scenario is quite unlikely, so I'd only give it a probability of about 10 to 20% of actually happening. This is because Tesla should easily be able to grow their earnings above 30% per year well into the decade as they expand their production capacity, reduce costs to produce the vehicles, solve FSD, etc. Now in the base case, I'm assuming an EPS growth rate from 2024 onwards of 40% per year, and this is slightly above analyst estimates of 37.2% over the next 5 years. Then I'm also assuming they'll have a 2030 trailing PE ratio of 50, which I do believe is realistic since they are currently at a trailing PE ratio of 161. You also have to think, for a company growing its EPS 40% per year, it's going to have a PE ratio above that number, meaning that Tesla would have a PEG ratio above 1. So pre-split, Tesla stock would be worth $6,408 by 2030, corresponding to a market cap of $7.27 trillion, assuming no dilution or share repurchases. Now, assuming the base case is accurate, you would need 234 shares of Tesla pre-split to be able to retire off Tesla stock by 2030. And to buy all of those shares today, it would cost you $256,000 US, which would then eventually grow into that $1.5 million at a compounded annual growth rate of 24.7%. I personally think this is a very realistic scenario considering that analysts see Tesla growing EPS above 37.2% per year over the next 5 years, and Tesla usually beats analyst estimates, so that's very good to know. Also, analysts seem to rarely consider a lot of Tesla's other initiatives whenever they're making their price targets, such as full self-driving, robo-taxi, insurance, Tesla Bot, Dojo as a service, etc. So realistically, many Tesla bulls would actually say that these numbers are very conservative, but I would much rather be conservative than surprised. And a 25% compounded annual growth rate is an amazing return per year, so I would be very happy to receive this. In the bull case, I'm assuming EPS will grow at 50% per year from 2024 onwards, which is slightly below the EPS growth rate they're seeing this year according to analysts. Now, if you think this number is crazy, just check this out for a minute. After Amazon first had a year of full profitability back in 2016, it was able to grow its EPS from $4.38 per share to $51.18 per share, which is an annualized growth rate of 63.5% over 5 years. So assuming this 50% EPS growth rate for Tesla is not out of the realm of possibility, then I'm assuming a 2030 trailing PE ratio of 65, which is still quite low considering their 50% growth rate. But keep in mind, guys, Tesla's PE ratio could be a lot higher and their earnings growth rate could be a lot lower, and then these two numbers combined in 2030 would lead to the same stock price, so don't get too bogged down into the individual numbers I'm using. Now, pre-split, Tesla stock would be worth about $12,600 per share in 2030. And if this scenario were to come true, you would only need to own 119 shares of Tesla stock pre-split to be able to retire off of Tesla stock by 2030. To buy all of those shares today, it would only cost you $130,000 US, which is the lowest amount here today, and this would eventually grow into that $1.5 million, so that's over a 10x over this 8-year period, being a compounded annual growth rate of 35.7%. This is an insane compounded annual return. Now, I really only think this scenario is possible if Tesla makes some major advances in their manufacturing, they crack FSD, and they're earning tons of high margin software revenue, the auto and the energy businesses are booming, etc. Also, there are probably many other things that we don't even know about today that Tesla's already working on and they will be generating revenue from by 2030, so that is always a wild card when it comes to Tesla because of their crazy innovation. Now, if you're familiar with the YouTube channel Solving the Money Problem, shout out to Stephen Mark Ryan, you're a legend. He has a 2029 bear case price target of $8,436 per share, while his most likely scenario for 2029 is a weighted average price target of $21,332 per share. These two numbers are both below his 2029 bull case price target, which for all I know could be around $30,000 per share. And so this is just going to show like my estimates are quite conservative when it comes to others in the Tesla community. Anyways, if you couldn't tell already, I am a huge huge fan of Tesla stock, and I see so much growth in the future and just so much opportunity for the stock price to rise. And I do think analysts are still severely underestimating Tesla and its abilities to grow profits. So even if my base case were to come true, I would still be very happy with a 24.7% compounded annual growth rate. But guys, please don't invest all your money into Tesla stock based on the assumptions that I made today. This was only for entertainment purposes only, and you should always do your research before investing in a stock. So if you did enjoy this video, be sure to hit the like button and subscribe down below for more investing and Tesla content coming soon. And with that said, I'll see you guys in the next one.